So I know this video was due a few days ago and some of you have asked for this. So let's talk about Palantir and what went wrong with their latest earnings. Well, a lot of things, and we'll talk about all those in just a second. Now, before I get into the video, very quickly, we just started our Discord and I'll post the link in the description and also will pin as a comment under this video. So if you're interested, then check it out, and also thank you for all those who have joined. I had opened about 100 slots for this round and looks like we are already getting close to being sold out. So thank you again for all who joined. And a viewer of this channel, shout out to Frank, had suggested that I should remind everyone to please click the like button and hit the subscribe so we can grow this channel more. I don't say it enough, and according to him, that is the reason the likes are lacking. So please go ahead and click on the like button and consider subscribing so you don't miss out on future videos. And if you enjoy investing, then consider joining the Patreon and Discord. Wow, this was long. I need to make it short, so I'll work on it next time. Okay, so Palantir came out with their third quarter earnings and gave us more than what we were expecting. I think a bit more, and we were not ready for it. So let's do this. Let's walk through the earnings, the actual numbers, and then let's talk about what market did not like. I will also share the behind the scenes stuff that's taking place in Palantir and a few trades that I have opened and some I'm still considering. So let's start with the revenue first, as that is the first and the most important thing everybody look for. So in their third quarter, revenue grew 36% year over year. And I have mentioned that in the past that anything over 30% is a great growth. But what was more exciting was that their commercial revenue grew 37% right here year over year, which is of course a great deal, and this is worldwide. Whereas their US commercial revenue grew 103% year over year, which is very, very exciting number if you just look at that metric alone. Now, take a look at the other metric. Look at this number. So they have grown their commercial customer count by 135% since December 31st of 2020. And this is a solid growth for a company who started in commercial side just a few years ago. So why did Palantir drop? Let me jump onto the cash flow actually, and then we'll get to that subject. Okay, so the other important metric is that for us to see how well the company can expand and grow in the future. So last year, this time, they were negative 285 million cash flow in 2020 right here. So first to third quarter of 2020, they were negative 285 million. And now the first quarter of 2021, they are positive by 320 million. Not only they have raised their 2021 guidance to be 400 million right here, as you can see, now they're saying that in 2021, they will be 400 plus million cash flow, positive cash flow, as compared to previously, they were estimating about 300 million plus positive cash flow. Take a look at their loss from operation. So the first 3 quarters of 2020, which was not that long ago, if you really think about it, they had a loss from operations for about $1 billion right here, $1 billion from first quarter of 2020 to third quarter of 2020. 1 point some billion dollar loss right here. And now in the first 3 quarters of 2021 right here, their net operating loss is about 352 million. They're still in loss, but from $1 billion just last year to $352 million this year. So now pay attention to this. Their adjusted operating margin has tripled from previous year, same time to this year now. Before, their adjusted operating margin was 11%, while this year, their adjusted operating margin is 32%. This is another bullish sign. So if everything is looking good, I mean, earnings came out as expected at 4 cents per share, revenue were a beat at 392 million, above the consensus, of course, of 385 million. So they were, or analysts were expecting 385 million. Palantir came and basically gave 392 million. The company is expecting higher Q4 revenue of 418 million. That is well above the analysts. They were estimating 402 million in the fourth quarter of 2021, but Palantir came out and said, you know what, we are going to deliver 418 million. Then what really happened? And is this the time for us investors to start looking for better growth stocks and keep our emotions aside? So let's take a look at all these answers in a step-by-step way. So why did Palantir went down? So in my opinion, the main culprit is government revenue. Government revenue rose 34% to 218 million from the years earlier, but the street expectation was about 235 million. Now, government is the biggest client of Palantir, and a slower than expected growth is definitely going to hurt Palantir, but there is a big piece that is being overlooked here. So as early as September end and October, Palantir has been awarded a bunch of new government contracts, and some of them are pretty big as well. And that is why Palantir has raised their fourth quarter revenue estimate to 418 million, while the analysts are estimating 402 million. So they know that all the government contracts or the revenue that they will be generating from government contracts will be very much reflective in the fourth quarter. The second reason for me is this. So Palantir is expected to turn profit this year, their first year of profit, and that is where all analysts were focusing. So when Palantir came out and delivered softer than expected results from their biggest customer is when analysts got uncomfortable and they came out and started downgrading the stock. Take a look here. So this is the latest, I would say, analyst estimates on Palantir. And as you can see, all these analysts came out 11/9, which is when the earnings were released pre-market. They came out and they gave updated price rating to Palantir, and they all downgraded their price rating. Right here, Morgan Stanley 24, Jefferies 31, RBC Capital 19, 31, 20. This all happened right after the earnings. And as you can see, as soon as stocks started to move down, we saw huge volume spike and price dropped almost 15% in last 5 days. So this is the volume chart that basically shows what happened right after the earning. So as you can see, this is 8th, the price was $26.75. Earnings came out on November 9th, and then after that, price just started to go down. 24.24, 22.52, 23, 22.87, and look at the volume spike right here. So if I highlight this, so if you can see 53 million right here, 43 million, 18 million, and 28 million. High volume day, because if you look over here, Palantir's volume is not very high. It's about 10 to 12 million shares every day, except one day in October 26th when we had like 24 million day. After that, it's all very small days. And of course, day before the earning usually is a high volume day, so that's 20 million. But after that, look at the volume and look at the price. So now, let's take a look at the chart together and make sense of where the stock is headed. So Palantir, to be honest, is looking bearish right now, okay, after the earnings, of course. Take a look at this chart, and then I will show you that Palantir is actually trading below 200-day moving average on a daily chart, where it has touched a few times and have always recovered well. So this is, of course, right after the earnings. This is when the earnings were announced, and you can see how the stock has come down really crazy. And right now, where it's sitting when I'm recording this video, of course, it's sitting right over here at this range of about $22, $23 in between that range. The problem here is that the RSI is really hot right now. So if the price is over here and the RSI is really over here, it'll take a lot of volume and positive volume to move the share price up and keep the RSI down. Because if RSI goes up, the price of the share is going to go further down. But today was a little bit better, and I'll show you the reason for that as well. So take a look here. This is the other chart where I have given you all the moving averages. The yellow line right here is a 200-day moving average, okay, right here. So actually, I'm gonna draw a line which will come out or which will show better on the screen. So this is right here is a 200-day moving average, as you can see. Okay, so every time Palantir has touched this, Palantir has respected the 200-day moving average and has moved up from it. So if you see over here, it almost touched it and then went up, touched it, went up, touched it, and this is the only time it kind of break down. And this was the time when we had that big sell-off in the whole market and the stock market was really down. And then after that, it went, touched again, went up again, touched again, went up again. And right now, it's again flirting with the 200-day moving average right here, which my expectation is gonna go up from here. Because if you look at the daily chart, the RSI is sitting really low, which is a good sign right here that it's right now oversold, not overbought. So from this point onwards, it will trigger higher if we don't get any negative news. Now, this is what I plan on doing with Palantir. The trade I'm about to show you only makes sense if you think Palantir is worth the stock keeping in your portfolio at these price levels. This is one of the best ways, in my opinion, to play a stock like Palantir. Okay, so this is what I'm doing right here, big enough. Yes, okay. So as you can see over here, I'm selling one February 2022 $20 put right here, and I'm getting $1.10 for it, somewhere in between $1.10 to $1.13. Then I'm buying a February 2022 $22 call, and I'm paying $2.81 to between $2.87. So I'm doing this in the same transaction because the money I'm getting from this is helping me pay for this. Okay. Now, I'm going to now next show you what is the probability of maximum loss, which I think is very important when you make a trade like this. Okay, so right now I will spend about $170 executing this trade right here. This is for February, and I will tell you why I chose that date. So $170 I need to pay to basically sell one put and buy one call. Then over here, if you take a look at it, my max loss, pay attention to this in the middle right here, my max loss is 2,170. So you can ask a question that I'm basically spending $170 while my max loss is 2,170. That's profit and loss, doesn't make sense. But what is this max loss? This is that you will end up buying Palantir share or 100 Palantir share for $2,170. This is the loss. The loss that you're going to have is that you have to own 100 shares of Palantir. That means that your bank account should have $2,000 when you are executing this trade, or $2,200 whatever dollars when you're executing this trade. So that's why bank can keep that money aside and saying that, okay, you are placing this bet, so we will keep aside $2,000 because you will be buying the 100 shares of Palantir at that price. If you just look at this trade alone, you will be owning Palantir at $20 minus $1.10 or $1.15, whatever it gets executed at. So if you don't want that, you don't play this. This is not for you then. But if you don't mind owning 100 shares of Palantir at $19, which in my opinion I think is a great price, then you absolutely can execute this trade today. The beauty of this trade is that you can actually get out of this position anytime you like. This one or this one. So let's say Palantir goes up to $22, $23, or $24 in the next run up. You don't have to keep this. You can make the money from this and you can get out. Very easy. Same thing for this. You don't have to hold it till February 2022. And why did I pick February 22? Right here. So the expiration of this contract is on February 18th, 2022, while the earnings is coming February 15th, 2022. And you know what happens after earnings, especially after Q4 earnings, because Q4 is going to be bigger than Q3 for Palantir in my opinion, and we are going to see Palantir run up to close to $25, $26, maybe $30, who knows, before the earnings. If that happens, both of these contracts is going to make money for you. Not just one, but both. Because right now you are betting that you will buy Palantir if it's $20 in February. If the Palantir goes to $25, this will be higher. And then you're buying a call for $22. If it goes up to $25, then you will make $3 of extrinsic value. That is going to basically be $300 right there between the difference, and then plus some more. So this is going to be profitable for you as we get close to the earnings, because Palantir is going to run up. And right now is a good time because of the RSI that you see over here is all the way down on a daily chart. Another point is this. When the volatility of a stock is high, it's really high right now. If you look at it for Palantir, this is the highest it has been, and it's actually touching that level right now. So I don't usually like to buy things because I'm paying a premium for it. But why I'm executing this trade is because I'm also selling something. I would like to sell at this range as well, because if I'm selling something here, that means somebody is buying from me. So I'm getting a top premium, and that's helping me to basically pay for my call. So I executed this trade. Of course, my quantities were a little bit different. I went up a little bit higher in quantity over here, and I executed this trade, and I'm actually very excited for this trade because I know I'll be getting out before February, probably by end of December or next run up when we will have. Biden just announced the infrastructure or signed into law. We can see some green days ahead depending on how the job reports comes out. Okay, so I have mentioned this in my previous videos, and I just mentioned as well that when historical volatility touches higher limits, then when you are buying something, you're paying higher prices, but I'm offsetting the cost by selling the put as someone is out there buying it from me. And that is how I try to take advantage of poor earnings reaction, because you know that if the stock moves 10%, then you are going to gain good 10 to 15% on these positions. And the beauty, as I said, is this: you can get rid of one of the positions. For example, if you don't want to own the shares, then you can buy your put back when it's up 10%, 15%, and keep the call open so you can take advantage of the next run up. And then you are basically playing with the house money, which is my favorite type of money. I'll link my Palantir and Checkmate video over here, as the company has long legs and a broad view on how Palantir is placing itself. So definitely check it out. Still like the company, but I'm very attentive and cautious with the stock-based compensation for 2022. And if they continue to award options at the same rate as they did in 2020 and 2021, then that'll be a deal breaker for me in the short term. But I really think that accelerated sell-off with insiders will reduce to a great degree in 2022, but we'll see how they proceed. I hope I provided some value, and if you like the video, then please consider subscribing and hit the like button. And if you enjoy talking about stuff like this, then come over to our Patreon and Discord group. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.